Good morning. Good morning. We're going to answer 10 questions about your mortgage loan for buying a new home. Good morning. I'm jemea.kingsby at @Miami_real estate. And today I'm here with German Tolentino at German.Tolentino with Fairway Independent Mortgage. German, thank you so much for joining me today.
Thank you for having me.
So German, before we jump in, tell me a little bit about yourself and your background.
Sure. So I'm a United States veteran, served in the Navy from 2002 to 2006. I joined actually right out of high school. I'm a father, a husband, love South Florida, new to South Florida, been here about going on 4 years, as a matter of fact.
Okay.
So it's really nice. Love the weather, love the people, definitely home for me. And been in the mortgage business a little bit over 5 years now. Love putting people into homes. Just a little background about me there.
Excellent, excellent. That's good to know. And for those that have worked with me, you know, you are my go-to lender that I refer my clients to. And what I found is that a lot of times the buyers are a little bit apprehensive or hesitant about speaking to a lender, especially if they know they're still like in the process of wanting to save a little bit more for a down payment or improving their credit. So this kind of leads me to my first question, why it's so important to speak to a lender at the very beginning of the home buying process.
That's a really good question. It's, the saying, knowing is half of the battle.
Yeah.
And whether you purchased a home before or you're a first-time home buyer, it really doesn't matter. Getting your finances in place is always the first step, right? You want to make sure that you qualify, number one. So that way, once you get into putting in an offer and get into the negotiation, you know that you're going to be able to close on your mortgage, right? And also, before you get into that process, you want to have some idea of how much down payment you have to have.
Yeah.
What are the closing costs going to be? A lot of people don't know that. A lot of people think it's just their down payment to have to worry about, but in reality, when it comes to mortgages, you have your down payment, you have your closing costs, and you have your escrows that you have to pay for. Then also your payment. What is your payment going to be like, and your interest rates? What's the market doing, so that you can understand a little bit. So all that information, it's very important to have that discussion up front. So that way, once the clients start working with you, they have an idea of what they're going to get themselves into.
Exactly. I think that's so right. You know, I think it's important for people to understand that you're not just there for the end signing off. You're there to really walk them through the whole process. And there's a lot of steps that, you don't want to overlook, as you mentioned. And you also can help them make some of those necessary adjustments.
Yes.
But speaking of some of those, I want to kind of see, like we're talking about credit scores and purchase price and down payments. Just starting with the first couple of ones, what constitutes like a good credit score? And then also if you could jump into the percentage of like the purchase price for the down payments.
That's a good question. Generally, it's a little different depending on where you get your information from, but a good score generally ranges anywhere from 679 to about 729. That right there is usually a good range that's considered good.
Okay.
Right. So I always tell my clients, now we can do loans less than those scores, but that's constituted good. As far as down payment, I mean, there's loans. For example, a VA loan, veterans don't have to make a down payment for their service to this nation, 0%. Also USDA, but there's loans for first-time home buyers where you can put as little as 3 to 3.5%.
Okay.
Which is pretty good, because a lot of hardworking Americans, it's hard sometimes to come up with the 20%. It takes them a long time. So this gives them the opportunity to get into a house now with as little as money down and start to build equity early in their life.
Yeah. That's super important. I feel like we need to have a whole nother conversation on the VA and the VHA and conventionals at some point too.
Absolutely.
Like, that's going to be necessary. I see it.
It's good. And that's actually, you brought up a good point. Definitely for the veterans, because it's a group in South Florida that I think deserves more attention. At least with the clients that I've worked with, and we definitely have to have a side note about that.
We're going to do that. We're going to schedule that for sure. For sure. Okay. So what about if, some of these families and they want to make some improvements they know they need to do? Do you have like some recommendations just that they can kind of keep in mind?
Yes. The very first thing before you start this process is always take a look at your credit report.
There it is. Yeah.
Most people don't take the time to do that. So, the government allows you through freeannualreport.com to get a copy of all your three credit bureaus through the major bureaus, for example, Experian, Equifax, and TransUnion. You can get your entire report. It doesn't give you the scores because you have to pay for that. Okay. So if you like, you could purchase a paid report that has that, but at least you know what's on there now. Yes. Right? Because as you look at your credit history, you want to look at your accounts. If you have credit issues, you want to try to take care of those things, collections. So as when you first get your credit report, you definitely want to get with someone that can advise you. Typically, real estate agents are good at looking at credit reports. We look at credit reports all the time. If there are some issues, we can go through the credit report to figure out, what it is that you can do and set yourself up for success. But the absolute first recommendation is get a copy of the credit report, review it with someone that can give you some advice. Because again, knowing is half the battle. Most people, they don't know. They're scared. Like you said, this is one sometimes with someone that wants to purchase a home, they're scared to talk to someone.
They're scary to look at the numbers. When you know the numbers, you have to do something about it. So.
Right, exactly. And what happens is they feel that no one's going to want to work with them or advise them. So that's not the case. Right? Because if we can help them now, we can show them now, and they know they're going to get there. It's never a no. It's just a matter of time. So
say that again. It's never a no.
Get your credit report, look at it, bite the bullet, go through it with someone, and set goals, and you'll reach them. So get the credit report.
I love that. All right. So moving into like the pre-approval, when does the buyer get that pre-approval letter? Because on my end, that's really important. I want to start showing with that in hand. Yeah.
Well, for anyone that's watching this video, don't ever go into the home buying process without doing that first. Sometimes people will there are people that will allow you to get under contract without getting that pre-approval. That's a no-no. That's getting the pre-approval is the first step. You should get with your mortgage advisor or loan officer, have them take an application, review your credit, provide them with all your documentation, and allow them to make sure that you are qualified. That is the most important thing. And generally, from the time you take an application and you provide your loan officer or mortgage advisor with all your documents, you can have a pre-approval letter within 48 hours. That's a good general rule. Sometimes it could be a little bit longer depending on your situation, but a 48-hour turnaround time is good.
That's a really quick, actually. It's really good. And that's not, obviously, that's only business days. So for those of you, Friday,
that's right.
I always like to just say that. No, that didn't mean Sunday.
Right. Although thank you for mentioning that, but sometimes we still do the pre-approvals on the weekends as well.
What?
So keep that in mind. Yeah. So
that's
good.
working for the people right there. Okay. All right. Weekends as well. Okay. In some cases.
In some cases, that's right.
Okay. All right. So now we're looking at kind of the mortgage payment. Can you kind of break down what can actually be included in the mortgage payment? Like I get questions specifically on between closing costs, insurance, HOA fees. There's a mix there that I get. So can you clarify from your end on that?
There is, yes. So PTIA, right? That's principal, interest, taxes, insurance, and HOA. That is what your mortgage payment will be made up of. So anytime you're qualifying for a mortgage, your mortgage payment is going to include your principal and interest, obviously the money you borrowed and the interest that you're going to pay over time, your taxes, your homeowner's insurance, right, which is covering the house. And then also for those that are putting less than 20% down, you also have to carry private mortgage insurance.
Yeah.
So that's an additional thing, which most people know it as PMI,
Yeah. Yeah.
right? And loans have PMI. So that's also, so those are the two types of insurances that you have to carry. And then also if you're purchasing a condo, or sometimes, a lot of townhomes have associations, and even some single family communities too. Sometimes they'll have a small association fee
Yeah.
that will
I've seen
also
that.
be included in your total mortgage payment as well.
Okay. All right, those are good. So we're just to summarize. So the additional fees, like the appraisal, what else do I have? The home inspection,
Mhm.
those are out-of-pocket costs to the buyer.
Well,
They cannot be included.
correct, right. And this is something good when you're getting into the home buying process to account for. A lot of people don't. The appraisal,
Right.
the home inspection, those are things that are, the appraisal is always required. Home inspection is optional, although I never recommend
Oh,
anyone to buy a
that's a
house without
must.
home
Yeah,
inspection. That is a must.
it's a
It, it
must.
it's it costs money, but you got to have it.
Yes.
You have to have it. So you have to account for that and
Okay.
make sure that you plan for the appraisal, and you get credit as far as the appraisal. Yes, you paid up front, but
Mhm.
what happens is that gets credited to you towards the end of the process. So that's a good
Okay,
thing.
on the back end there. Okay, very good.
Yeah.
And then the other one, I recently had this situation with the membership. That was very
Mhm.
specific to one situation I'm recalling in my mind here, but it was a golf and country club. They
Mhm.
had a membership of about $80,000.
Oof.
We can't toss that into the mortgage, can we? We
We
can't.
can't. No, we can't. That's a lot of. That's a lot of money.
Wow.
When you mentioned that to me, I was like, wow, $80,000 for membership. That's a lot. But no,
I
it can't
mean,
be tossed into the
it's
mortgage.
a really nice community, I will
Well,
say.
I bet. Listen, if I'm paying $80,000 for a membership fee, it has to be the
It
bells and whistles because that's a
It
lot of
was
money.
it was all of them. But okay. So I just want to make sure we're clarifying all those extras that
Mhm.
do exist specifically in Florida. You know what I mean? I know it's just these are common things that actually come across, the housing pricing. Okay, so what else did I wanted to ask you? You pretty much broke down about the insurance and how to avoid that with the 20% less. But I just want to clarify a little bit further on that one. Can you kind of break down when
Absolutely.
you pay the PMI, the MI, the
Mhm.
UMIP, just a little
Yeah,
bit
that's
more?
good. That's a very good question. So, generally, anytime that you put less than 20% down, you are required by federal law to carry private mortgage insurance.
All right.
So let's break that down. So you have a few types. When you think of private mortgage insurance, generally that refers to a conventional type loan.
Right.
So whatever you pay on the private mortgage insurance side for conventional is going to vary depending on, for example, your loan to value. How much are you putting down,
Mm-hmm.
right? It's also what your credit score is and the type of loan. So that's going to vary. So that's PMI. So when you put less than 20% down for conventional financing,
Mm-hmm.
you must carry private mortgage insurance.
Okay.
Then um, you have PMI in the sense on the government side, like for example, FHA loans. FHA loans have what's called an upfront mortgage insurance premium. So it's a little bit different
Okay.
than the PMI. So they have two. They have an upfront, which is financed into the loan. You don't have to pay that out of pocket. You can if you choose to, but that goes to the FHA fund to help with foreclosures, things of that nature. But then you also have a monthly mortgage insurance premium that you pay on a monthly basis,
Okay.
and that's for the life of the loan. So you have two.
And you can't pay that down at any point.
No, that's a great question. So on FHA, if you put less than 10% down,
Mhm.
that's going to be for the life of the loan. Now, if you put 10% down though, at towards what happens is it after 11 years it falls off, so you still pay for quite some time, so it
Okay.
doesn't really, and if someone's putting that kind of money down, I'd rather advise my clients to help them to get to the conventional side so that they can save literally tens of thousands of dollars over that next 10-year period, because it doesn't make sense unless you must have the house and this is the only way to make it happen, right? That's the only way that I would advise that.
Okay. That makes
Yeah.
perfect sense.
And then on the VA side, the great thing about it, all you have is an upfront mortgage insurance premium, which is also financed into the loan, but you don't have a monthly,
Okay,
which
that's
is great.
great savings
That's
for
great.
veterans. That's
That's
amazing.
huge savings. And I love that
Wow.
about VA loans. You
Yeah.
don't have to have that. And that's why um thank goodness for the VA for our veterans. I mean, the way that they've set up the financing with no money down, no PMI, it's just fantastic. Only loan that does that. So
Wow.
that's what it boils down to at the end of the day. So for conventional, less than 20%, you got to carry PMI.
Okay.
FHA has an upfront. It also has a monthly, and for VA, just an upfront, no monthly PMI.
Perfect. All right. I like the clarification on that. Okay. Now I'm thinking about this, especially with COVID and how low the rates are. That's been a huge selling point right now for buyers, is that their rates, they can take advantage of the pricing because of the loans. Now, are those interest rates locked in? Or how do you lock them in? What are we actually looking for when we go and say, hey, I want to get this loan at this
Mhm.
interest rate? Is it going to skyrocket in 3
Mhm.
years? Oh, you know, how does that work?
That's a good question. So I always have this conversation with my clients up front, because everyone thinks when you're starting out in the process and you're going through the pre-approval pre-qual, people think that the rate that we quote them is the rate that they're going to have. But in actuality, the market changes every day. So
Yeah.
the time that you lock your interest rate in, which we're going to talk about, is once you get under contract. So once you've found a house, you've submitted the contract, and you've both agreed that you're going to purchase this home, at that time is when you get with your loan officer, once you're under contract, and you lock your interest rate in.
That's when it gets locked right then.
That's when it gets
Okay.
locked,
All
right?
right.
And you have different options when it comes to locking an interest rate, and you can lock it in for 30 years fixed,
Mhm.
right? So that means it's not gonna ever change,
Which is ideal right now. Like with,
which is
if this is the
absolutely ideal.
lowest we're going to really see,
Hi-
historically speaking, this is,
Historically speaking, yes, and
yeah.
and we're looking at also into 2021 rates are going to
Mhm.
remain low, which is good. So this is absolutely the time to buy, because I mean the way people are borrowing money right now for houses, I don't think it's going to be like that ever again. So this is the time
Yeah.
to do
Yeah, this is definitely. Okay, that's great information. And then how quickly can the clear to close be completed after that final approval and the funding? What's the time frame on that?
it. Good. So generally, so from the time that you get under contract, we can close a mortgage within 30 days or less. Our team, our company, our average turn times are 21 days.
Wow.
So, and we've been known to close loans in 10 business days, which is
Wow.
really good if need be.
If need
Those are special circumstances.
be.
But
Yeah.
from the time that we get the clear to close, right? So that means that we've come to a point to where the underwriter has said, we've reviewed everything, we're going to make this loan. We have the final approval. I would say a good general rule from the time you receive the clear to close until you close and fund, a good 72-hour turnaround is pretty good, which is good.
Okay.
We
Okay.
we have the ability to do it sooner if need be, and we've done it before. But it's good to give everyone time to prepare the package,
Right.
or do things that people aren't aware of that have to happen during the process. So I would say 72 hours from clear to close
Okay.
up until we close and fund.
All right. Yeah, that's really good. And I like just, and nobody wants to do anything in a rush too. There's so many different
No,
hands that everyone's got to do
there's
their part. It's
You're absolutely right. Do you know, on average, it takes 21 people to close a mortgage. 21. You would
21.
never, you don't,
I
right?
didn't even know that. Like
No,
21 people?
21. It's amazing
Wow. But that's
how
true.
many different departments and people
It's
it takes to make
true.
this happen. And you don't know this unless you're in the industry. And when
Yeah.
I tell people
Between
that,
the
they're like,
appraisers team,
21
the
people,
inspectors team,
you
the
have,
lenders team, the real estate team. I know I have a crew, you have a crew,
right?
like everyone's.
It's a lot. Yeah, it's a
That's
lot.
true.
So we want to
Okay.
give everybody, we want everybody, we all work hard, and
Yeah.
it's stressful to do this. So we want to give everyone enough time.
Okay. 72 hours. And again, folks, that's not including weekends.
Yeah.
So don't plan your Super Bowl parties on a Sunday. We'll get you in there by Monday.
That's right.
All right. I had another question for you about when the mortgage payments actually start, because like I'm thinking if someone closes on Thursday, Friday, especially like it's the 5th of
It's
November.
good. Yeah.
If I closed last week, am I trying to, do I have to pay, November 1st? Was that, I want to make sure that's really clear because that can be intimidating,
That is, yeah. Sometimes people think, well, if I close today, I got to make my mortgage payment December 1st.
Right.
But in actuality, when when a lender closes your mortgage, what happens is, let's say, for example, today's the 5th and you close today, right? You're going to pay up towards the end of the month because from the day that you close, towards the end of the month, you're going to be living there.
Right.
The following month, you're not going to make that mortgage payment because we're collecting it at closing. So
Okay.
your first actual payment is not going to be until December 1st. Or in this case, it would be January 1st, right? If we close today, you're going to so-called skip December and you're going to make your first payment January 1st.
So you've got a little breathing room depending on wherever that very first month, you forego that to the following month. Okay.
Yes.
Okay, excellent. I think sometimes that gets just a little bit stressful, as you're thinking about closing dates. That's something that I found people just want to know and make sure that they're not having to pay back-to-back payments when they're coming out of pocket. This was really great information. Is there kind of anything else you want to share, as far as the process goes, or common questions that you get that I haven't kind of asked you already?
No, I think we covered a lot. Again, I think the most important thing with anyone that's looking to buy a house, again, that pre-approval process, that upfront work with your mortgage advisor and your realtor together, because it's a team, right?
Yes.
So you want to make sure that whoever you decide to work with, that you like, that you feel comfortable with, right?
Yeah.
And that you know that you can rely on them, because without that, the process can be stressful, right? So you want to get with them, you want to get with your team, the realtor, the loan officer, take a look at your situation, make sure you're pre-approved, make sure you run scenarios before you get under contract. Those things take time. But if you do that, you're really going to set yourself up for success. Make sure that's the most important thing. Find people that you like, that care about you, care about their job, and they'll help you out.
That is sound advice. That's excellent advice. German, thank you so very much for just breaking the details down for us. Listen, how can people contact you if they want to, ask a few questions? What's your best contact?
So I am on social media, on Facebook, German Tolentino, the only one, and also on Instagram. And you can also reach me by a personal cell phone number is 954-901-5825, or you can email me at gtolentino@fairwaymc.com.
Fabulous. I'll have all the contact information below for everyone. And again, I am jemea.kingsby at @Miami_real estate. I'm with the Howland Group at Compass in sunny South Florida. Always feel free to DM me or reach out to me at 786-328-0335. And until next time, take care, everyone. Bye.